Sure. So most of what Americans borrow on, whether it's their mortgages, their cars, what have you, are generated based on what long rates are, because you're borrowing for a fairly long period of time. So what 6 months or a 1-year T-bill is not half as important what the 10-year note or the 30-year treasury may be. So that's what's really critical. Now, so when Trump jumps up and down and screams that you have to have lower interest rate, it does help the economy, okay? But it only helps the economy if people can still even afford to take on more debt. We're now seeing people to the point that they're ordering food delivery and borrowing against it. That is another signal of excess. And one thing about excess, it always tends to go longer than we ever think, but we know it comes to an end. It's just like, I don't know if you did fireworks when you were a younger kid, but the bottle rocket, occasionally one will go a lot longer and we get real excited, but it popped and it came back to earth. And, that's the attitude I have. But so on the interest rate deal is the Federal Reserve can influence greatly shorter rates, but longer rates are going to be basically on your government's ability to borrow and how much money it's going to need. And let's not forget, we had a president when he came in the early days was sitting there with Musk talking about how Doge is going to not only get rid of the deficits, but it's going to pay down the debt. We're going to find so much money and do so much to that. That's all gone. Deficit spending is just completely out of control. There's not any sense or any desire on either side of the aisle, other than a couple individual congressmen and senators, to do anything even about the deficits. And this is all occurring at a time when I'm here to say, and of course I'm a big proponent of the BRICS and countries moving away from the United States and de-dollarization, but this is coming at a time when there's no way even the best of bullish people could say that we have more friends in the world ready to help us if we have a problem. I think we have less friends. And this is a time, if we're going to keep having these deficits and have to seek borrowing, especially outside the United States, we're running the risk that one day some of these people may say, listen, I'll do it, but at a lot higher rate. Or you know what? I don't even want to do it anymore. And that's a legitimate possibility now that didn't exist 10 or 20 or 30 years ago or in those previous financial crises. We're not in the same economic, social, political shape that we were in those last three. I would argue that all three are far worse than any of those periods of those three, especially on the political aspect. If for whatever reason the market crashed after we're done with this show, I don't think both these parties can go in a room and solve anything like they somewhat did, at least during those three. That last one, they didn't do a great job. That was their chance to really restructure stuff. Let's not forget, in that 2008 mortgage crisis worldwide, but particularly here, we created quantitative easing. If people can forget and remember, maybe a third or a half of financial advisors weren't even working back then. Bernanke and Obama came out and said, we're going to give all these banks and bail them out, but don't worry, they're going to put the money into, which is another crisis in America, which we could talk about, infrastructure. We have a huge infrastructure crisis in America. But at that time, going all the way back to 2007, people can go look it up. That's where the money was going to be spent. It was going to put people back to work. It was going to make the economy strong and all. And unfortunately, much of that money stayed on Wall Street. It didn't make it into Main Street and all. Problems now is, if we had to come up with another 5, 10, 15 trillion overnight like we did with COVID, I don't know if the world's prepared for that. I don't think the world would be coming here to buy any of that debt at all, let alone what America would have to. So I think all aspects, social, political, and economical, are far worse than those three previous. That's why I think it's going to be harder and longer lasting than those three. And the escape route, which all three had, will not be available this time around. The vast majority of Americans are struggling day to day. Again, I point out that much of Wall Street focuses on that top 10%. There is a campaign, and usually it's the smaller people starting in the business and all who focus on that other 40% that had the 40%, and no one's kind of talking to the poor souls that are, one of the big crises here we have. How many people are struggling just to literally put food on the table or pay a bill? All of that is far worse than it was back at those period of times. And what will happen is everybody will ask for the government to do something. But the government's tools to do something and the availability and the cohesiveness as a government to perform that, I don't think is anything remotely close to back then. And that's why I'm afraid that if we're right, no one knows for certain, but if we do have another sort of crisis, it's going to be far worse and much more longer lasting because we don't have the abilities to get out of it in the ways that we did in the previous ones.
Yeah.
The reason that they have an appeal, AOC and those type, is because of those people that are really struggling and all. That's when socialism and communism sounds great. Look at all those guys. Look at that Bezos guy and all. He's got to just get some of that to us and we'll all be good. When you got nothing and you still are human beings and got family and little kids, yeah, I'll go with that. That sounds great. So they have an appeal now because of that separation of this two-tier economy we have. But I'll tell you something that I'm very upset about that happened this past week. No one's going to talk about it. I don't expect to turn on one of those networks and all. So they made an announcement that they're going to change one of the tools in the consumer price index. They're going to take out long-term care. They're not going to track the pricing of long-term care anymore. And they literally say in their reason, the government is because the prices are going too high and it's making the index look worse than it really is. Well, that's a real hard fact of life. All us boomers now, the expectation for boomers and just before boomers is the need for long-term care is so acute, and 98% of us are not financed to do that. The cost is only going to go so much higher, and it's whether they have it in the index or not, we have to pay it. So now we had a president that went out and said, for 5 months, when we all kind of knew, at least I was and some others, the employment number's way out of whack. How could ADP have this number and we keep having all this employment number? Now, of course, it came out. Well, for 5 months, he didn't want to fire the person in charge. Now, the person who they're bringing in or nominated or going to nominate publicly has stated that maybe we can stop just putting out the employment number for a while. And my opinion, just so you know, is they've always had this weird birth, death model, work model that they come up with and all, and then they readjust it and everything and all. Listen, it's the old joke about the accountant. One accountant, got the job because he answered when they asked him what 1 and 1 is equals, he says, what do you want it to equal? Well, that's kind of what they're going to do here. They're going to make a model that's going to make it look better than it should be and all. But these are all the things that I always like to say to people that when we look back, we're going to go, see, we should have known, but we're seeing them individually. And we're, like you said, much of America, that definitely the 50% and a good part of that 40%, they're so busy now and all. They have to just take the word of what they're hearing, whether it's from an advisor or a politician, or because day-to-day life is so much more intense for them than it was for our parents and our grandparents, because we're all caught up in this, this make-believe world of more stuff equals more happiness and all this kind of stuff. But the bottom line is that upper echelon that Wall Street caters to, they have no idea about the life you and I live. They don't make their own food. They don't drive their own cars. They don't take commercial flights. They live in a different world. And I don't blame them in a sense because they're caught up with that. That's how many of them are born into that. So they're always used to having a nanny and somebody cutting their food or whatever and all. But the bulk of America that has to go up like you and I and get up and work and all that kind of stuff, we're going much harder and taking much more impact in our lives to accomplish maybe even less than our parents or grandparents have, because every medical study that studies the psychology of today's generation says that they're more messed up and more stressed out than our parents or grandparents were. We have this false facade that Wall Street and Madison Avenue created, that more money equals more happiness. So the guy driving the bus can never be as happy as the guy that owns the bus company. But in real life, I can tell you, some of the happiest people I ever met were people with little or no means, and some of the most unhappiest people, and some people that used to be clients and the athletes I dealt with who have dreams money that we can only dream of, are some of the most unhappy people that I've ever met. But that's the world we live in, and that's the world that we have to try to figure out now, since they kind of influence most of us people that don't have a lot to say or do, but what could be happening that they can hurt us. And one of the things like I feel is that things are going to get much tougher for a longer period of time. And those who still have something, that's where the government's going to have to come to. So when I hear politicians say they're going to lower taxes and all that kind of stuff and all, it can't happen because governments only take from one end to do to another. And the only other thing they can do is cut spending. And as you can see, that's impossible in Washington, D.C. I did something back in 2021 that really would have been totally advised, and I would understand the people saying that you don't do that. Don't listen to that guy, Grandich. I made a decision back in 2021 that, for reasons that take too long to tell, but that gold, and I'm not a gold bug, I don't have a gold company, but I believed because of what was happening with something called the BRICS and how governments around the world were going to move away from the dollar and de-dollarization and all, gold could only go one way, up, and they're going to buy gold because eventually the inevitable question that would come from our conversation from people would be, if we talk long enough, well, how does this all come to an end? How do you fix it? What will happen? Eventually, after all the implosions and all the things, and I'll be long in the ground, we'll have to refloat a monetary system that goes back to having something real behind and not just fiat currencies. Now, there's a group out there that will tell you it's Bitcoin and cryptocurrencies, and I'm not here to get into a debate about that and all, but I can tell you they are right in this sense that it's not just going to be a fiat currency again. My argument was the powerful people are using gold, the central banks, and until they change, that's what I wanted to focus on. And of course, since then, gold has outperformed both stocks and bonds, even again this year. So my focus in there is not because, the world's coming to an end or anything in nature, but it just seems to be a place where I feel better, and I don't see any type of signs that we're at, an end of a run and so forth and so on. It's going to be a lot harder to double or triple from where I was buying it at 1,300. We're now at 3,400. We've almost had a tripling in it, but it still has upside, but then it has side events that make it worthwhile and sister relationships like silver and copper. But because the world spent so many years neglecting with limited capital going in to look for new resources, because one of the things that bothers me about these financial commentators and these anchor people when they have the talking heads on is all. So somebody comes on and raves, and that's all they do. They talk about artificial intelligence. That's all it is. And you're going to make all sorts of money and everything. And no one bothers to ask them, what I'm hearing is we can barely turn the electricity on now. Where are we going to get all this power from? And from what I understand, you need certain metals to build these places where we can have all this power. So on one hand, they'll say, and they're right, maybe artificial intelligence is going to keep going up. But then we better find ways of how we're going to get higher electrical distribution or power, what power you're going to use, whether it's nuclear. And that's why the nuclear stocks have done well now, because people realize that. But we spent almost 2 decades of neglecting large expansion of looking for these ores, these metals that we need. And then if you really want to get concerned, and this really drives you the most crazy about, we're getting into a potential war with China. Even our own defense secretary said that. He's preparing for a war over Taiwan and China. Trump said, he's my pal. Okay, the bottom line is, if we do get into that war, the things we're going to do to support our side, the military equipment and all, it needs certain critical minerals in order to make them and keep going. Guess where most of those critical minerals are at? The guys that we're going to be fighting. And so I find it absurd that if we can talk about artificial intelligence, yet if I tried to get on one of those networks and say, well, this is why you should be looking at copper and all, they would toss you off. They give 2 seconds about gold or silver on their markets and all. So my focus and continues to be that in the metals in particular, there's going to be money to be made there. And that's where I've been focused. But in general equity markets, people say, what are you, a communist when you say you like China? Listen, empires change. Every couple hundred years, China and India are more likely to be doing better 5 or 10 or 15 years from now, in my opinion, than the United States will. So therefore, I better have some exposure there, whether or not I like them or I think whatever they do is right, if I'm going to be invested. So that's how my thinking is in terms of that.